The Securities and Exchange Commission held the first Capital Markets Committee meeting in 2020 on Thursday, April the 15th and Friday, April the 16th. At the CMT meeting, members discussed issues bordering on the implementation of the 10-year Capital Markets Master Plan, the implementation of the FinTech Roadmap, as well as other matters relating to the capital market and the economy. Well, joining me now to talk more about the outcome of the meeting is Mr. Oke Umeano, the head at the Office of the Chief Economist at the SEC. Good evening, Mr. Umeano. Thank you for joining us on the program.
Good evening, Eddie Young. Thank you for having me.
Well, the CMC of the SEC had its first quarter meeting for 2021 to discuss development in the markets. What were some of the major resolutions at the meeting?
Okay. Thank you, Eddie Young. We had a good meeting on Thursday. As usual, the meeting was about making the capital markets better, doing what we can to continue the implementation of the 10-year master plan, capital market master plan. So we discussed the issues around unclaimed dividends, making it easier for investors to get their dividends. We talked around some little technical issues with the e-dividend system and resolved to have all the stakeholders come together to, look at these bottlenecks and remove them. Aside from that, we also looked at other things like the new rules that have come out, to help make the market better. One of them is the one on the warehousing and the collateral management for the commodities market. As you know, we are trying to deepen and enlarge the commodities market in Nigeria. And we have certain rules that have been exposed and some of them have even been issued by the SEC. So we had everyone who is involved, talking around it and to know all the areas we need to touch to ensure that we have a vibrant commodities market.
Mentioned unclaimed dividends. The SEC has faulted the activities of some capital market operators which frustrate the e-dividend mandate process, leading to a rise in unclaimed dividend in the market. Now, can you tell us more about this?
Okay, the system was designed to make it easy for investors to access their dividends when they are paid. And we also, in designing that system, expected that we would not have new unclaimed dividends. What I mean by new unclaimed dividends is that after the time we started implementing the e-dividend system, that no new dividends paid by companies would accrue into the unclaimed dividend pool. But we found that an unacceptable amount has been, accruing in that pool. I know that a lot of it is because of identity management issues. There are people who bought securities, who bought shares in the past, who haven't been able to, sort out their identity issues. So some unclaimed dividends are amassing because of that. But also we want to ensure that the system works in such a way that people who already have mandated their accounts for e-dividend will get their dividends, so that such dividends do not enter the pool of unclaimed dividends again. So that's what we're talking about. So it's not such a big problem. It's just that when you have a system, certain parts of the system could constitute bottlenecks. And we've identified these areas and we are working on taking care of them.
Okay, I'm glad you would mention that because one would say that in the bond markets, for example, we hardly hear issues of unclaimed coupons or coupons not being paid. So what is being done differently in that space that can be applied to the equity space?
Okay, in making that comparison, it's important to understand that the bond market in Nigeria and the equities market have slightly different structures. For instance, the bond market is dominated by institutional investors. So so the number of individual investors you have in the bond market is is much lower than what you have in the stock market. So that's the main difference that makes it a bit easier, to handle coupons when it comes to bonds. When it comes to dividends, it's a whole different ball game. You have individuals in far-flung places who have, been investing in the market for donkey years. So it's a bit difficult, to get some of them to come to, mandate their accounts for dividends. But we are working hard. We are trying to make sure that we sort this out so that we'll put the issue of unclaimed dividends behind us.
Well, still at the CMC meeting, the DG of the SEC said the Commission is working with the CBN on crypto trading regulations. Now, what's the update on that, and how have discussions been so far?
Okay, those weren't the exact words. He said that the SEC, was working with the CBN to understand the market and see how best we could regulate the market. So we haven't really started writing regulations on that. But yes, we're engaging the CBN. The CBN, from day one, when they made that release, said that they were open to discussions. And you know that before that time in September, the SEC had released a statement, classifying digital assets and saying which ones fall into the purview of, under the purview of the SEC and how they would deal with them. So with the CBN's release a few weeks ago, we had to, recalibrate, So we have started these engagements. We are speaking with CBN. CBN has told us what their concerns are. We're very genuine concerns. And we are together looking at how best to approach regulation of that segment of the market.
Well, while we wait for that, the SEC is at the midpoint of the implementation of the Capital Market Master Plan to further deepen the capital market. So what has been achieved so far, and what more is left to be done?
Okay, a lot has been achieved, Didion. We just discussed the e-dividend issues system that we have put in place. That's one of the results of the Capital Market Master Plan. If you remember, in Nigeria some years ago, if dividends were paid, you had to wait to get slips of paper, checks. You could cash. But we are done with that regime. You also remember that in days of the past, we used to have share certificates. These days, we don't have that again. We have fully demutualized. We have dematerialized, not demutualized, sorry. We are fully dematerialized, so you don't have those physical certificates. And we have also, strengthened the rulemaking system, and we've also automated processes. All these were part of what was contained in the Capital Market Master Plan. Going forward, we are going on with work on the non-interest capital market. That's a very important part of the market for us. And what we are doing now is engaging stakeholders, creating awareness, building capacity. Just a couple of weeks ago, we engaged the IFSB, Islamic Finance Standards Board, and we had a 4-day capacity building for people in the market in terms of the non-interest capital markets. So that's an area we are hoping to develop. Another area is derivatives trading. As you know, we have released the rules on derivatives, and we are gradually building a market, a derivatives market. We've approved 2 central counterparties. We are putting things in place to have that market going. So all these are things contained in the Capital Market Master Plan.
Well, recently, the SEC issued a directive on the proliferation of unregistered online trading platforms, saying that foreign securities should not be traded on these platforms. Now, what led to this directive by the SEC, and what is the Commission also doing to find a way to put some regulation for investment tech rather than shun them?
Okay. The SEC is a responsible regulator. And when the SEC sees things going amiss, it's the Commission's responsibility to take action. Some players started, making these foreign stocks available for domestic investors without going through the approval process of the SEC. The capital market is a regulated market. No player, no entity can go into the market, and set up shop without going through the necessary approval process. These approvals are for investor protection. They are to curb illegal activity. They are to ensure that we have fit and proper people in the market. So the SEC has the responsibility to do all this. The SEC has the responsibility to, regulate a market that is fair to all. And when players come into the market without going through the proper channels, then it's a problem. So the SEC identified this and just sought to let everyone know what to do, the right thing to do. And then coming to the second part of your question, what the SEC is doing in terms of enabling innovation, and helping these fintech companies come in and, play in our space. The SEC has been very proactive in terms of helping these fintechs get registered and do things the right way. One of the things the SEC has done in the past 2 years is to set up a fintech and innovation office. We have that office in the SEC right now. And that office was set up so that companies like these can approach the commission, say what they want to do. And the commission is able and willing to guide them, to do these things within the rules and regulations that guide the market. That's very, very important. It's important that anybody who wants to play in the market does so within the rules and regulations. So that's what the SEC has done. So it's very easy for anybody, any fintech, any firm, any entity to walk into the SEC and ask how they can get A, B, C done. The SEC is willing. The office is mandated to help. And we presently have a number of these fintechs going through the approval process. So it's quite unfortunate that a few would decide to, just set up shop and ignore these necessary steps and begin to trade.
All right, Mr. Mano, thank you for clarifying that. And thank you for sharing your thoughts with us on the program.
Thank you, Adidiang.
Mr. Oke Umeno is the head at the Office of the Chief Economist at the Securities and Exchange Commission.